Good morning, good afternoon, good evening, depending where you are, and welcome to the Wednesday, the 20th of April, Bull versus Bear webinar. Steve Miley on the call for trade day. Welcome, everyone. We're going to go through normal, regular run through here as I do every day with you guys. We'll take a look at the calendar, what we've got coming up. We'll take a look at the both the macroeconomic calendar, but also the earnings calendar, see what we've got of interest coming up from the earnings season today, whether that might impact onto the major indices. We'll also take a look at the headlines and some articles from the major news wires. What are the macroeconomic, fundamental, geopolitical events that are determining what's going on in the price action with the global financial markets right here, right now? And we'll also take a look at some charts to see where the opportunities might lie today. Right, let's take a look at the data first of all. So the main focus we're going to have going in today, really, I guess, is going to be for you guys, are going to be the oil inventories. We've had some inflation data, PPI data out of Germany today. Nothing too significant through this morning. It's been a fairly quiet session through the European session so far today. And then as we go on today, so we do have that crude oil inventories data, 10:30 Eastern, and Fed member daily also speaking at that same time, 10:30 Eastern time. So those are the main focal points going into today. If we look at the, I'm going to just do the filters on here. So we've only got the big stocks in here. So those are ones that might affect the major indices. What do we have? Well, it's Tesla in focus. That's after the bell. We've already had in here Procter & Gamble, ASML, Abbott Labs, in here all this morning. Kind of mixed batch in here, mostly better than expected. Notable misses in here on ASML though, big misses there, but not too impactful on markets right here, right now. In fact, we've got like the major US indices are fairly flat. European indices are slightly better in here today, and we'll come to that shortly. But playing catch up with the rally, really, the European indices that we saw in the afternoon session, in the latter session in the US yesterday. 5 things to start your day. A small but growing number of senior Kremlin insiders are quietly questioning Vladimir Putin's decision to go to war. Is that a positive or a negative? Is internal conflict within Russia is probably not a good thing in some ways. But then if Putin out will probably be a good thing in the long run, but I mean in the short run that could cause issues for markets with indecision. Netflix was the real headline from after the having had a really strong session on the tech side yesterday. Nasdaq gave up quite a lot of a notable amount of gains yesterday in the latter session. Has rebounded since then. We'll take a look at the chart, but partly driven by Netflix, which tumbled in late trading and pre-market trading. First time in a decade it's lost customers. And so that's certainly seen as a negative. So, and then also talking about a lower price lower price version of its service with advertising. Real rates, investors in 10-year traders expect to earn real returns on their money for the first time in more than 10 years. So real returns. The yield in 10-year inflation protected treasuries rose as high as 3 basis points. So basically, these are the tips. So inflation protected securities actually trading with a positive return in here for the first time in some time. Futures were lower and have rebounded and coming up today in here. Nothing really of a massive note in here, as we've already spoken about. Daily speaking, Evans and Bostic apparently are back speaking in here today. We'll talk about that shortly. Let's move on about see what else has been going on. So in here, Reuters going within here and their recap from yesterday. Wall Street advances yesterday on earning optimism, dovish rate rise remarks. So that they did come from, and I've got the article here. We had so Bullard had already said about Bullard who's the hawk. Remember, let's go to the hawk dove sheet in here. Bullard right down here. We spoke about Bullard yesterday. Bullard is a hawk, and Bullard reiterated yesterday sees rates increasing to 3.5% by the end of the year. And he does not rule out 75 basis points, 0.75% rate hikes going forward. Okay, but remember, he's a hawk. But what we have had is in here yesterday as well. Stocks appear to brush the remarks aside. We'd already had those over the weekend. And then they focus more on what Evans had to say, and also Bostic in here. And what did they have to say? Well, Evans, particularly in here, that's stepping up in here, he's comfortable with 250 basis point hikes. Okay. But certainly a more dovish tone. But again, if we look where Evans is in here, look, Evans is up here as a dove. Bostic is further down here, though, more on the hawkish side. And Bostic's comments were slightly dovish as well. Not as certainly not as hawkish as we'd seen previously from Bullard in here. Okay, so a slightly more dovish tone in here. And despite treasuries, we spoke this yesterday, treasuries were going lower and equities were rebounding anyway. Now, this morning, equities bonds have turned around and gone back higher. They dipped and then went rallied. We could have a quick look at that. On the charts, we spoke about them going to still lower prices, higher yields, and you can see that overnight in here gone low, and then strong rebound in here in bond prices, higher prices, lower yields, and that should assist stocks going higher, particularly growth stocks. Okay, so we'll be watching for that to maybe come through as we go into the session. We've covered most of that. Bloomberg US future steady rally deepens in treasuries. So a better rally having initially dipped. And Bank of America came out, goes long 10 years treasuries, sees inflation panic easing. Now, this is what I was talking about. So Bank of America put out a note in here, focusing on it here. On the recommendation, the firm cites expectations that easing inflation will cause rates to fall from here. So they're looking for lower rates, higher yields, which obviously will benefit stocks, particularly those growth stocks, is what I've been talking about. While CPI inflation is 8.5%, with the market maybe overemphasizing inflation risk, our focus points to inflation peaking this quarter and falling steadily into 2023. We believe this will reduce the panic level around inflation and allow rates to decline. That's what I've been talking about the last week in here. I really reinforced it yesterday. I think we're at a point where we're hitting or close to peak inflation. There's going to be, and the data is, there's little signs in the data. The core CPI data gave us a hint towards it last week. Okay, and I do think there is real risk. Okay, look. So it sounds like they are choosing the side of peak inflation. So looking for peak inflation and looking for the peak hawkishness, and the market is very, 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 very hawkish in here at the moment with regard to the Fed. So kind of echoing Bank of America in here. Echoing, I used to work for Merrill Lynch, Bank of America. I used to work at Merrill Lynch for many years. Most of my career actually was at Merrill Lynch. Echoing what I was saying in the last few days of this. So, and that this can only potentially help see bonds go back higher in price, lower in yields, and that should, as I say, help stocks, particularly growth stocks. Okay, so covered that. So in here, nothing really more in here, I don't think, to add in. Okay, what else we got from Reuters in here? So just where we are going into today. So Europe's up, right? But Europe's up. Remember, most of the reason Europe's up, anywhere between, FTSE's only up 1/3%, but most of the stock indices over 1% higher. But remember, there was the late rally. Remember, European stock markets, these are the cash markets, right? These are the cash indices. They close anywhere between 4, 5, 6 o'clock local time, right? Which if you're in the US, that's going to be very early afternoon, 12, 1 o'clock, something like that, 2 o'clock in the afternoon. So then we get the extra time when the US is open, when these cash markets are closed. Now, the futures markets stay open, the European futures markets stay open, and they can react, but the cash markets don't. They don't react till the next morning. So a lot of this reaction in here, a lot of this, the reason we're up in here over 1% is because European markets were closed. And then we got the kind of quite a late, strong rally from US stocks in here. I mean, they rallied through the day, but particularly into the close, there was a strong rally. Where we look at the US stocks in here, they're obviously up significantly at the end of the day. S&P and Nasdaq around 1.5%. Sorry, S&P and Dow up about 1.5%. Nasdaq was 2%. But then going into today, we're kind of unchanged, pretty much unchanged in here. Nasdaq slightly lower, Dow and S&P slightly higher in here going into today. A couple of other articles in here from Reuters. Gains in stocks capped by rising real yields. Netflix disappoints. So Netflix obviously weighing a little bit on the tech sector going into today, and more of the same in here. I look at the day ahead in the markets. So it's all the same focus really in here. Higher yields, although we're seeing higher yield pressures, although we've seen those reverse back lower in here this morning. Watching Fed speakers, so same kind of stuff in here as we've been watching. And just a little side note in here, Credit Suisse, we had some fairly negative numbers from JP Morgan last week. We've got obviously more further financial sector Most of the financial sector has reported now, the majors out of the US, but we had Credit Suisse in Europe warning of Q1 losses, and their stocks are down this morning in here. We already covered that. Just a quick nod in here to the Fed tool, the CME Fed Watch tool. So look, we've already, the next meeting, basically nailed on now for a 50 basis point hike. If we look further out now into the June meeting, we're getting to the points now. Look, this is just for then going after a 50. This is going for another only 25. So now the market is looking for at least 250s and potentially a 75 now. Okay, going into the next meeting. Let's take a look at some charts. Well, first of all, we've already touched on this one. Now, at the moment, this candlestick that we got now, obviously, it's the actual cash markets are not open yet. So this is on the treasuries. So we're not really properly open. But nevertheless, if the candlestick stayed like this, so it's not quite a bullish engulfing day. If it pushes up through here and closes up here, then we've got a bullish, you've got a potentially bullish outside pattern if it closes above yesterday's high. But what you do have is kind of like almost like what do we call in here? The opposite of dark cloud cover, a piercing pattern. So a piercing pattern in here. So this would be certainly a positive in here, and we'd look for the potential further upside in here on bonds. It's certainly looking that way at the moment. They're pushing, as we speak in here. If I go into the 30-minute chart, you see they're impulsively moving higher. So it's a really strong rally we've had in here this morning. So bonds higher, and that should be good. Bonds higher in price, lower in yields. That should be positive for stocks. Let's take a look at the S&P and the NASDAQ. S&P in here back up towards yesterday's high already. Okay, pushing higher on the futures, up towards yesterday's high. Certainly a strong rebound. If we step in now to like a 1-hour chart, you can see in here, look, just short now of this high here yesterday. So, we might have just pipped it yesterday. So the high there was 67 yesterday. I think the high was 66 and a half or 66 and a quarter, 66 and 3/4. Okay. So we just pipped it yesterday in late trading. Okay. And then in here, we're getting back up closer. We take out this high in here. There are certainly think we could be back above like 4,500 going into today. So real upside potential, I think, for the NASDAQ. We spoke about this potential basing pattern yesterday. We're kind of consolidating that. And then if we get above this peak in here again, yes, this peak, overnight peak, 4470 in here. Yeah, 4470, right? 4467, excuse me. Get above here. This looks really bullish in here, and I say easily up to 4,500. And a similar story for the NASDAQ. In here, we spoke about this 61.8% retracement, flirted below there on Monday in pre-market trading, rebounded from it Tuesday, and look, pushing back up towards the peak from yesterday already today, stepping into the 1 hour. So then back up to the peak there. Now, look, look at these two peaks in here. We've got 14,296 and a quarter, 14,284 and a quarter, and this peak in here is just above 14,300, I think. 14,305.75, right? Up through 14,300, this looks like a really solid base in here for the NASDAQ. You've almost got you could argue head, inverse head and shoulders. Head here, like a double shoulder over here, and you've got maybe we could argue 1-2 shoulders over here. So up through these peaks in here, up through that peak particularly, 14,296 and a quarter would be a really bullish signal. 14,300 could really open us up towards 14,500, maybe a size 14,450, 14,500 going into today. So real upside risk on the break if we get that break to the upside. And remember, after the bell, Tesla could also have an impact, but obviously you're trading through the day in here. Let's have a quick nod to the commodity markets before we wrap up. So let's take a look at those. In here, starting off with gold, really big sell-off yesterday. Having had that, we spoke about the shooting star yesterday. I said it looks vulnerable, right? And also oil. We had the shooting star pattern the day before, big sell-off, wiped out loads of support. It's given back a significant amount from this breakout. Remember, we're in this range forever, boring. Every day we're coming on, no view. We've broken out and now back right into that range. And now this morning dipped and rebound. I've got really no strong view in here. I mean, we've broken out. You could argue it's a failed breakout. I've got it on a 30-minute. I'm going to just shift this to a 1-hour chart just to show some more of the back data in here. But look, we're kind of back into that range. We're in this choppy range in here. Get rid of all the drawing tools. We were in this choppy range forever. We broke out. It looked like it was going to go significantly higher, and a significant dip right the way back into the middle of that range, right? Right into the middle of that range, back into this value area, kind of held at the value area. I mean, you hold a gun to my head, I'm bullish, yeah, because we've had the breakout. We had a big sell-off yesterday. It's flipping back higher in here. I think there is risk. you could be pushing back up. That's going to be a key trigger point there, that one there. 1960.7. If we can clear that, could be back up into here. But at the moment, not really wanting to trade that one. Let's take a look at oil. Daily, first of all. Again, we noted a potential topping pattern on oil yesterday. Significant sell-off, but we're rebounding in here today. Let's go look at the 30-minute. So we looked at this. Remember, head and shoulders top, that one neckline here. We broke down through it. Look, as it broke, impulsive, boom, all the way down. It's been spotted, and actually it looks like I'm on the wrong month in here now. I think we're on the June as the front month. Let me just double check that. I'm going to do that off screen. 1 second. Pretty much sure we have rolled to June. Bear with me. Crude oil. Yeah, June contract. So we should be on CLM1 now. So I'm just going to type that in. The sentiment's going to be the same. And I'll get rid of the price action is the same, even though it's on a different contract. So we're going to close those down. I need to just double check on gold as well. Gold's on June as well. So, yeah, I'm still on June, on gold on June. But yeah, so we're on June now on oil, guys. So please make a note of that. But it's the same sentiment, really. If we go to in here, I'll go to the daily chart first of all on June oil. So significant sell-off back lower and bouncing in here today. Same thing. 30-minute chart now on June. And again, these lines are not the right lines in here anymore. But same kind of thing. It was a head and shoulders top. You blasted down through that. Just trying to recover. Just broken above the overnight high there now. I think there's upside now back into here. I'm not aggressively bullish, but I think there's probably potential upside back into here going into today, up towards maybe like 104.5, 105 going into today. Okay, remember June contract now. We'll stick that in the chat on one of the forums and in the site chat. Okay, guys, to remind you guys. All right then. Okay, that's all I've got in here for you guys today. I'm going to wrap it up. I'm going to wish you all a great trading day. Stay safe out there, and I'll be back with you tomorrow for another bull versus bear webinar.